we know markets have gotten very pessimistic. They've priced in a 60% probability of a recession. And if tariff negotiations de-escalate, then the probability isn't that high. So I think that there's still a big window for markets to have a large rebound, but it's really the path of this de-escalation.
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. Tom Lee says there's still a big window for markets to rebound. He'll break down why he's so optimistic and what's driving his view. Let's dive in and hear more.
Okay, you used the word draconian. That was your word. But I'm going to play off of that and say, well, what if we're in a post-draconian period where, because of that, we're left with the rubble of that decision-making in the White House? And the damage has been done. CEOs have no visibility whatsoever. You see this consumer sentiment number today?
Yeah, they're awful.
Do you see where inflation expectations are?
Yeah, they've gone bananas.
Do you see what earnings expectations have done recently?
I mean, there's no ability to make guidance.
So what if the damage is already done now?
That's right. Now, we have to keep in mind this has been 10 days. So it is a shock, a high-amplitude shock, but only of 7 days. So someone can restart the patient's heartbeat. I think that the White House is now keenly aware that Main Street can't handle a huge deleveraging because it is going to lead to job loss, and he's listening to CEOs. So I think there's a really big window to repair the bulk of this damage. And at the other side of this, of course, is that we have reciprocal tariffs in place that are acceptable. We have tax policy that's changing and less regulation. So I actually think the 2026 outlook is still quite good.
Which puts are you, so to speak, more reliant on now, a Fed one or a Trump one?
Well, I think there's a call at work and a couple of puts. I think that there is a Fed liquidity put that was in evidence today by the Fed.
Collins said what she did?
Exactly. And we know the Fed put on rates strikes much lower. The White House has a policy put because we know that you can't brinksmanship the global economy to a halt just to try to get China to blink. And I think that the call is, I think there's a negotiator call, which means I think the White House exercised the Navarro call and replaced him with Besson.
Bitcoin is holding steady around the $80,000 mark, bringing a sense of calm to a market that's seen its fair share of wild swings lately. A big reason behind this stability is the quiet but steady activity of whales, large holders who are scooping up Bitcoin while prices stay firm. Their accumulation hints at growing confidence that Bitcoin has more room to run, even after its impressive rise this year. Adding to the positive mood, global tariff tensions are starting to ease. With trade fears cooling off, investors are feeling less pressure to pull back from riskier assets like Bitcoin. This lighter atmosphere is giving Bitcoin the breathing room it needs to find support around these higher levels, instead of immediately sliding back down. Traders and analysts are watching closely, as steady whale buying usually signals strong underlying demand. If current conditions hold, Bitcoin could be setting the stage for its next big move. For now, the market seems to be catching its breath, and that might just be a good thing.
So we in a bear market? I mean, we're in a bear market, right? I mean, it almost doesn't matter, textbook, whether you say we are or not. It's like so many stocks got just absolutely destroyed before this uncertainty happened in the market.
Yes. I mean, if we define a bear market as stocks feel like a grind or you're losing money, I'd say it really started in December because markets were churning even through the February high. But if I was to define a bear market as unleashing a type of financial tightening that leads to a recession, we're not at that criteria yet. But I think it feels like a bear market for the average person.
Are we supposed to buy into that? Or just stay cautious and on the sidelines, don't do anything, sit on our hands? I don't think people know what to do. And I'm not just talking in the CEO suites because they obviously don't know what to do. How can you? So what is the investor supposed to do?
Yeah. I mean, I think there's sort of two brains people are fighting. One is the tactical brain, which is, look, they want to know if this is a bottom, and they want to be convinced of it by seeing stocks rally on bad news. But if someone had the investor hat on, and, that's the long-term brain, I have a lot of confidence the U.S. companies are going to navigate through this treachery. Stocks are hugely oversold because you never really lose money buying the VIX at 50, or when the percentage of stocks above the 200-day drops to 15. Those are almost guarantees of positive 1 year, 3 year, 5 returns. So it depends which brain you're wearing today, but I'd say the majority of our clients are trying to be tactical.
I hear views of, well, it's really hard to get uber bearish now because a headline at any moment, as I said in the open here, the market is waiting so hard for some bit of good news that if you're on the wrong side of that, you get a day like you had on Wednesday.
Yes. I mean, if I was to oversimplify the framing of this, U.S. and China have absurd levels of reciprocal tariffs at the moment. And if you believe those are in place, then the global economy is in trouble and you should be bearish. But if this is a matter of who makes the overture first or blinks, but we know it de-escalates, then I think the downside it comes off dramatically, and I think stocks can actually do really well into the rest of the year.
So you'd be a buyer right now?
Yes, and with the apology that, of course, I didn't think Liberation Day was going to be this draconian, but yes, I would be buying stocks today.
What would you buy?
Well, one of the things we did for our clients last night is to look at what's called, Walter Deemer calls, sold out stocks, which is worse than oversold. Sold out stocks don't go down because there's a lot of bad news priced in. Mm-hmm. There's a lot of stocks that didn't make new lows on Tuesday, April 8th. They made their lows a month ago, and they had lower volume on April 8th. Those are what I'd call washed out stocks. A group that I think's washed out is the Mag 7. So I'd look at Mag 7 as a place to really expect a rebound, including stocks like Tesla.
Bitcoin is showing strength again, finding solid support around the crucial $80,000 level and bouncing back with renewed energy. After holding firm in the $75,000, $80,000 zone, which has long been seen as a psychological and technical safety net, Bitcoin is now eyeing higher targets. A bullish divergence between the RSI and price hinted early on that the bears were losing steam, encouraging buyers to step back in. Right now, the rally is facing a big test, the 200-day moving average sitting around $87,000. This level is acting as tough resistance, making it likely that Bitcoin will spend some time consolidating between $80,000 and $87,000 before making its next major move. If the bulls can push through and close above the 200-day MA, Bitcoin could quickly aim for the highly anticipated $100,000 milestone. Zooming into the 4-hour chart, Bitcoin has already made an impressive surge after finding support at the middle of a descending channel. It's now knocking on the door of the channel's upper boundary near $84,000. A breakout here would signal the end of the bearish pattern and open a path toward $90,000. But if Bitcoin gets rejected, it might face more downward pressure in the short term. On-chain data paints an even more optimistic picture. Recent trends show a steady rise in coins held by midterm holders, those who have kept their Bitcoin between 3 and 12 months. This growing hold behavior mirrors past accumulation phases that led to major rallies. With fewer coins circulating and more moving into strong hands, Bitcoin's scarcity is increasing, setting the stage for potential price discovery. Altogether, the current signs suggest that Bitcoin's recent pullback is not the start of a bear market, but rather a healthy pause in a much bigger bullish cycle. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.